Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar is emerging from the fog. Stock indices are worrying about overvalued assessments. Gold has been dealt a new trump card. And Bitcoin is making dead cat bounces. The House of Representatives voted 222 to 209 to reopen the government. The president immediately signed the bill into law. The longest shutdown is finally over. This promises that the Fed and investors will soon begin to emerge from the fog as soon as statistics are published again, allowing them to make data-driven decisions. But will they like the emerging landscape? Alternative sources show a slowdown in the U.S. GDP. The IMF forecasts a decline in its growth rate from 2.8% to 2% in 2025. The Eurozone, on the other hand, is expected to accelerate from 0.9% to 1.2%. At the same time, the Bank of France plans to raise its estimates for the country. Despite the ongoing political turmoil, the narrowing divergence in economic growth argues in favor of maintaining the upward trend for Euro-USD. The same can be said about monetary policy. The ECB has most likely ended its cycle of easing, barring any major shocks. The federal funds rate is likely to continue falling amid a cooling U.S. labor market and economy. The euro has advantages over the dollar. The stock market met the end of the shutdown with mixed dynamics. The Dow Jones Index recorded its 17th record high this year, thanks to growth in the shares of major banks, airlines, and consumer goods manufacturers. The S&P 500 closed the gap formed at the opening. The Nasdaq 100 fell. Investors are betting on accelerated GDP growth following the government's resumption of work. At the same time, doubts about the effectiveness of investments in artificial intelligence persist in the technology sector. Since 1981, the S&P 500 has grown by an average of 2.3% in the month following the end of a shutdown. If history repeats itself, the broad stock index is expected to reach 7,000 by mid-December. Generally, the return of the government to work accelerates economic growth. However, the U.S. will have to go through a pain period. According to forecasts by the Congressional Budget Office, the 6-week shutdown of the executive branch will cost GDP 1.5 percentage points. Investors prefer to diversify their portfolios by reducing the share of G7 stocks. Nvidia and Amazon are trading at 31 times their expected earnings over the next 12 months, Microsoft at 30 times, and Google at 26 times. At the same time, the return on substantial investments in artificial intelligence remains modest. OpenAI plans to spend $1.4 trillion on these goals over 8 years, while the company's annual revenue is only $20 billion. The weakness of the U.S. dollar and rumors of the Fed resuming asset purchases have catalyzed a rally in gold. In October, the central bank announced that it would cease reducing its balance sheet as of the 1st of December. John Williams then stated that the Fed would soon reach its reserve adequacy level. The natural next step would be to purchase assets. Finally, his colleagues at the New York Fed noted that the regulator would not have to wait long before buying bonds to maintain the desired level of liquidity. In 2011, gold reached a record high thanks to quantitative easing programs. Since the beginning of 2025, the precious metal has risen by 60% and is on track for its second-best annual gain in history after 1979. Asset purchases and lower federal funds rates are forms of monetary stimulus. They lead to a fall in treasury yields and a weakening of the U.S. dollar. This environment is favorable for gold. Bitcoin's attempts to grow in a falling market resemble a dead cat bounce. Crypto enthusiasts attempted to capitalize on the government's opening to launch a counterattack. The current administration is loyal to cryptocurrencies. This circumstance, along with other factors, formed the basis for the rally in digital asset capitalization to a record high of $4.4 trillion in early October. However, since then, the bulls have lost almost all of their gains. The market is spooked by reports of a massive sell-off of tokens by crypto whales. After Bitcoin fell 20% from its historic peak, investors are concerned about the narrowing premium between current prices and the acquisition cost of cryptocurrencies. Add to this the outflow of capital from ETFs, and the current decline in Bitcoin seems logical. Cryptocurrency is facing a lack of demand amid growing supply. The shutdown has left investors hungry for data. The week leading up to the 21st of November will satisfy their appetite. Shortly after the government reopens, The September report on the state of the U.S. labor market will be published. Unfortunately, according to the White House, employment and inflation statistics for October may be irretrievably lost. On the 19th of November, the world's largest company, NVIDIA, will release its third-quarter corporate earnings report. Given its huge market capitalization and high concentration in the stock market, it is sure to shake up not only the stock market, but also other financial markets. The key event for the upcoming week will be the publication of the minutes from the October FOMC meeting. The split in the Fed's ranks forced Jerome Powell to dissuade investors from lowering the federal funds rate in December. The chances of such an outcome have fallen from more than 90% to the current 50%. The doves insist on the weakness of the labor market. Their opponents express concern about still high inflation. The hawks emphasize that they have previously compromised, but do not intend to vote for a loosening of monetary policy at the end of the year. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.